Hey everyone, it is Julie here with TipRanks, and today we're taking a look at 5 strong buy dividend stocks for the month of August. So let's get into it. All right, guys, welcome back. Thank you all so much for being here. Yet another month has flown by, and that means it's time to take a look at some dividend stocks for the month of August. Now, all of these companies have an ex-dividend date in the month. That is the date that you have to own the stock before in order to be eligible for that next dividend payment. So today we're taking a look at 5 dividend stocks, all with those ex-dividends in August, and all coming in with a strong buy consensus from Wall Street. We found these stocks using the TipRanks dividend calendar. Found right under the Tools menu under Calendars, the Dividend Calendar will show you week by week all the companies that have an ex-dividend date coming up. From here, you can also narrow it down by analyst rating, market cap, sector, and the exchange that the stocks trade on. Just before we jump into today's stocks, this is a friendly reminder that if you enjoyed today's video, make sure you hit that thumbs up button and that you're subscribed to the channel as well. Now let's get right into our 5 dividend stocks for August. First on the list today is Bank of NT Butterfield and Son. Trading under the ticker NTB at $38.68, this is a stock we talked about a few months ago, but it continues to be a solid dividend choice. It has gained 28% over the past year and has gained another 14% in the last 3 months. The Butterfield Group is a leader in offshore banking and trust services. Butterfield has ties dating back to the first bank in Bermuda in 1858. Their operations are now located in Bermuda, the Cayman Islands, the Bahamas, the Channel Islands, Singapore, and Switzerland. Their services include wealth management and specialized financing, also providing residential mortgage loans in the UK. The company has been paying out a consistent dividend now for about a decade. Their ex-dividend date is coming up on August 5th for a payment date of August 19th. Their current quarterly dividend is 44 cents per share for a dividend yield of 4.5% and a healthy payout ratio below 32%. They just shared their second quarter results last week on July 22nd, where they did come out with an earnings beat. For their Q2, they reported earnings per share of $1.09, beating expectations by 4 cents per share. They had net income of $50.6 million and a return on average common equity of over 20%. The company also approved new share repurchases of up to 2.1 million common shares. Most recently, we had an analyst from Wells Fargo weigh in on the stock. He rates the stock a buy, saying that despite some headwinds, the bank's capital return remains a compelling aspect of its financial story, particularly in the second half of the year when a balance sheet contraction is expected. They also note that the bank continues to be a conservative choice for investment, with its relative valuation presenting an opportunity even as the market re-rates higher. The Bank of NT Butterfield and Son has 4 current analyst ratings, all coming in as a buy. The average price target comes in at $41.25, implying an upside potential of about 7%. Looking at our ratings down below, on the low end, we do have a buy rating from back in May with a slight downside of 2% if we already surpassed that price target. More recent ones coming in on the high end at $44 for an upside of over 13%. Our second stock today is another one I've definitely mentioned a few times over the last couple of years, but is worth taking a look at again. That is Energy Transfer. They trade under the ticker ET, currently priced just above $16 per share. Their stock has climbed 32% in the past year, gaining 5.7% in the last 3 months. Energy Transfer provides natural gas pipeline transportation and transmission services. For more than 2 decades, the company has helped supply America with energy. In that time, they've grown from a small interest rate natural gas pipeline operator to one of the largest and most diversified investment grade master limited partnerships in the United States. The company has more than 125,000 miles of pipeline and associated energy infrastructure in 44 states transporting oil and gas products. Energy Transfer is an MLP or Master Limited Partnership, so you will get a K1 instead of 1099, but that does come with a very attractive dividend yield. Their ex-dividend date is on August 9th for a payment date of August 19th, and at 32 cents per share on a quarterly basis, their dividend yield comes in at 7.71%. Energy Transfer has been paying out a dividend since 2006. They'll be sharing their Q2 earnings report in about a week's time on August 7th. This does follow mixed results for their first quarter back in May, where they had an earnings miss but revenue beat. For their Q2, analysts are anticipating earnings per share of 35 cents. In their Q1, they reported revenue of $21.6 billion, which did beat estimates, but earnings of 32 cents per share did fall 5 cents short of expectations. The company did see adjusted EBITDA of $3.88 billion, and with that earnings report, they did increase their full-year adjusted EBITDA range to $15 to $15.3 billion. At the start of July, we did have a five-star analyst from Mizuho increase their price target on the stock. They bumped it up to $20, saying that Energy Transfer remains the analyst's top pick as valuation is still compelling versus peers, and the street seems to underappreciate their leverage to the data center/AI theme. The ET stock does come in as a strong buy with 9 current analysts, breaking down to 8 buys and 1 hold. The average price target of $19.50 would imply an upside potential of about 21.5%. Looking at our ratings here down below, on the low end, we do have a hold rating here at $17. We have several price targets all around $20 per share, and our high-end price target coming in at $24 for an upside of nearly 50%. For our third dividend stock, we're taking a look at Sunoco. They trade under the ticker SUN, or SUN, currently priced at $54.63. They have climbed 26% overall in the past year, but have cooled off recently in the last few months, dropping 1.3%. Sunoco is an American petroleum company focused on refining and distributing oil products in the U.S. Previously engaged in oil, natural gas exploration and production, refining, chemical manufacturing, and fuel sales, they then divested those businesses and are now focused on being the largest independent distributor of fuels in the United States. Today, Sunoco distributes fuel to over 5,000 gas station locations in more than 30 states. They are another MLP and have dividend payments dating back over a dozen years. Just announcing their most recent dividend payment, the ex-dividend date will be August 12th for a payment August 19th. Their quarterly dividend will be about 88 cents per share for a yield of 6.42%. Their Q2 report is also coming up next week on August 7th and follows a big earnings beat back in their first quarter where they had record net income. For their Q1, they reported earnings per share of $2.45, well exceeding analyst expectations. They had record first quarter net income of $230 million and increased their full-year adjusted EBITDA guidance to $1.46 to $1.52 billion. Following that last quarterly report, we did have several analysts upgrade their ratings on the stock, including one from JP Morgan. The analyst placed the shares on a positive catalyst watch after the acquisition of Newstar, saying that they view the acquisition as a transformational deal and sees Sunoco as a more diversified entity with increased stability, scale, and growth opportunities. With 7 current analyst ratings, the Sunoco stock does come in as a strong buy with 6 buy ratings and 1 hold. The average price target of $61 would imply an upside potential of about 12%. Looking at those recent ratings down below, we can see several analysts upgrading their price targets. The high-end price target coming in at $65 for an upside of 19.5%, while our low-end price target is from Mizuho at $59 for an upside of about 8.5%. Moving along to our fourth dividend stock today, we're taking a look at Hasbro. They trade under the ticker HAS, currently priced at $65 per share, gaining 4.7% in the past year and 7.6% in the last 3 months. Hasbro is a game developer and entertainment company. They deliver engaging brand experiences for global audiences through toys, consumer products, gaming, and entertainment, with a portfolio of iconic brands including Magic the Gathering, Dungeons & Dragons, Hasbro Gaming, Nerf, Transformers, Play-Doh, and Peppa Pig. Hasbro first started paying out a dividend back in 1977. Their next ex-dividend date is August 21st for a payment date of September 4th, and the current quarterly dividend of 70 cents per share would be a dividend yield of 4.38%. They just shared their second quarter earnings report on July 25th, where the company came out with a big earnings and revenue beat. For their Q2, they reported revenue of $995 million, beating expectations by over $50 million, and earnings per share of $1.22 well exceeded the estimates of 78 cents. They did note that revenue declined 18%, driven primarily by their E1 divestiture, but the company did see a growth in profit and raised their full-year guidance. Following that quarterly report, we did have an analyst at Stifel Nicolaus increase their price target. They commented that Hasbro reported better than expected results, representing the second consecutive quarter of meaningful upside relative to street estimates. Following a guidance upgrade for 2024, the firm raised their estimates and noted that Hasbro remains a Stifel select list idea. The Hasbro stock is rated a strong buy based on 9 current analyst ratings with 8 buys and 1 hold. And the average price target of $76 would imply an upside potential of over 17%. Looking at our ratings here down below, our high-end price target comes from Roth MKM at $82 for an upside potential of 26%, while our low-end price target comes in at $69 for an upside of 6%. And last but not least, our fifth dividend stock for August is going to be Goldman Sachs. Trading under the ticker GS, they're currently priced at about $506 per share. They've climbed 46% in the past year and have gained 19% in the last 3 months. This is another one that we've talked about recently, but another one worth looking at. Goldman Sachs is a well-known name as a leader in global banking services. They provide a wide range of financial services to clients, including corporations, financial institutions, governments, and individuals, operating through 4 main segments with their investment banking, global markets, asset management, and consumer and wealth management. Goldman Sachs has a solid track record of increasing their dividend payment and just recently announced an increase to this quarter's. They bumped up their quarterly dividend to $3 per share for a dividend yield of 2.2% and a healthy payout ratio at 35%. That ex-dividend date is right at the end of the month on August 30th for a payment date of September 27th. A couple of weeks ago, on July 15th, Goldman Sachs did report an earnings beat for their Q2. Earnings per share came in at $8.62, beating expectations by 31 cents per share. The company had net revenues of $12.73 billion and have had a return on equity of 10.9%. A 5-star analyst from Bank of America recently reiterated their buy rating on the stock. They said that buy rating stemmed from the company's strategic positioning, which they believe is well suited to capture market share, navigate regulatory landscapes, and achieve a sustainable and higher return on equity. The Goldman Sachs stock does have 16 current analyst ratings, coming in as a strong buy with 13 buys and 3 holds. The average price target comes in at $524, which would just be an upside potential of about 3.5%. But if we look at some of our more recent ratings, we have a lot that are up in the double digits. On the low end, we do have a buy rating here at 464, which would actually be a downside of over 8%, while our high-end price target comes in at 571 for an upside of nearly 13%. So that is a quick look at 5 strong buy companies, all with ex-dividend dates in the month of August. Let me know your thoughts on these companies and some of your other favorite dividends, as there's a lot of great ones out there, and I always appreciate hearing from you guys. Please keep in mind these videos are never a suggestion to buy or sell any specific stock, so make sure you're always sticking to your own investment plan. Thank you guys so much for watching. I hope you have a great day, and I'll see you back here next time.